Welcome once again to Retire Smart Maryland with Prashant, Sabapathi, and Nick Innerbichler of Elite Income Advisors. I'm your host, Spike Spengel. The fellas don't know this is coming. This is their 50th anniversary episode. 50 episodes.
Pretty cool.
Lots of information, lots of education that you've shared with folks. And by the way, lots of phone calls, right?
Yeah.
You talked to tons of people from the television show.
Absolutely. And we should take a second to just say thank you to all the viewership out there. I mean, the reason we keep doing these shows is because people keep coming in and we're able to help them with a lot of different things. So thank you to the audience. And I know we got a great show lined up
we
today.
started airing these shows in a very tumultuous time, right at the beginning of COVID. So we're really grateful, like Prashant said. I mean, we've met with so many amazing people over the last couple of years and, you know, helped a lot of people that weren't sure they could retire. And that's very satisfying to us as a team.
Wonderful. Well, thankful, and no plans on stopping anytime soon, right?
Not at all.
We're going to keep this information train rolling.
Yeah, absolutely. And I know we got a great show lined up today because with the thought of having a potential recession, or maybe we're already there, who knows? But if a recession is coming around the corner, we got to be prepared for that. And so today's show is definitely going to be about recession protection. I think it's something we
recession protection, folks, what can you do? What are action steps? What do you need to consider? The definition of a recession is 2 economic quarters of a lack of growth or going. I would say we're in quarter number 3 right now. So I think we could officially say we're there. So many different factors why the incredibly high inflation, interest rates going up, stock markets going haywire, the bond market's lagging behind as well. A lot to worry about, but we don't want to scare everybody out there. We're going to talk about solutions today, right, Nick?
Yeah, I mean, the thing that people don't understand, why this is considered one of the worst starts to the year since, I think, 1970, is because both stocks and bonds are down at the same time. I mean, that's something that people don't, you know, fundamentally, bonds and stocks move in opposite directions. But we're experiencing downs in both.
We are, and when we talk about solutions, because you're right, this show's intended to be educational, and we don't want to just scare everybody. It really comes down to what can you do to take the appropriate steps to prepare for retirement. And I think where that starts is really having a good understanding of if we were to go through a recession, so maybe there's higher taxes, maybe increased market volatility, you know, unemployment goes up. If you're 2 or 3 years away from retirement, you need to have that plan in place that shows you where your income's going to come from. Because in a recession, when unemployment gets higher and maybe you're two or 3 years away, the last thing you need right now is to get laid off at the wrong time and be that close and then have something go wrong in your retirement plan.
If we're concerned about recession proofing our career right now, I mean, because it is a possibility. We're seeing it in the tech sector across the board, layoffs, hundreds of thousands here and there. Could happen right here in Maryland as well. We know that we've got a lot of government employees, contract employees. They could just say, well, we can't afford this contract this year. So coming in and talking with a financial advisor preemptively, good idea, or do you wait until that reduction in force?
Absolutely. I mean, as you mentioned, I mean, there's local companies that we deal with a lot. I mean, Northrop Grumman, we have a lot of clients from there. FedEx, we have a couple of clients from there. They've all laid off people in the past, and it's important to have a plan ahead of time. You don't want to wait till something bad happens to start planning. So, you know, going on a trip, no different. Have a roadmap, your Retire Smart roadmap that we put together for everybody that comes into the office. It will help you navigate those tough times.
And when you talk about recession-proofing your employment is all about what? It's all about the paycheck, right? I mean, when you're there, the employment is a means for a paycheck. If you want to recession-proof your employment and your retirement, it all comes back to how are you going to recreate that paycheck if you're no longer working? That is the million-dollar question to recession-proofing your retirement, is where's your income going to come from?
Well, not just the income, though, but what I worry about somebody who might be 60, 62, how do we go back to putting together our resume, spell checking, all of that, and so forth. But more importantly for the family, how would we take care of that health care gap?
That's a great point.
For another 2 or 3 years until Medicare. I mean, Cobra is incredibly expensive.
It really is. And those are all costs that we have to deal with. I mean, you can't go without health insurance. And so if you do have a 2 or 3 year gap before you can bridge to Medicare, how are you going to come up with the extra $600,000, $800,000 a month? And that's a heck of a lot of money. And so maybe you want to start to have a plan in place for de-risking your retirement portfolio, because if you need some of that retirement savings to pay for healthcare over the next 2 or 3 years, you don't want that money. You don't want your healthcare subject to a volatile market that at different points in the year we've seen go down by 22, 25, 30% at times. That's a heck of a lot of risk to be taken on.
I think it's wonderful when people are trying to retire as soon as they possibly can. I think of all of us, want to do the same. Or you guys have said you're going to keep working at Elite Income Advisors as long as you possibly can. But for those who are right on that threshold, I'm a little worried about folks trying to retire too early. When there was something like that, when there's an economic event that stops them from being able to save, besides the fact that they're losing the paycheck, then they're also not getting that matching and everything else that comes from an employer. So do you like to have them on that just razor thin edge of just enough to be able to retire? Or do you like to have some room for error?
I think there should always be quite a bit of room for error. When we build our clients' plans for the Income for Life plan, we're going to always estimate a higher level, right? Not only just to account for inflation, but we don't want our clients to retire and sit at home all day. When you retire after working however many years you worked, you might have worked for the same company for 30 years, it's time to reward yourself. So you want to build in some fun into that retirement plan. But you also have to account for these unexpected things.
So let's take an example there. So if you think that you need $5,000 a month coming in after taxes every single month to make your retirement as fulfilling as possible, when we put together this customized income plan, we really want to be planning for $6,000, $7,000, $8,000 a month of income, because that's what's going to give you wiggle room, and that's what's going to allow you to be comfortable to know that you have more income than you actually need. That way, when inflation is high, like it is now, you don't have to worry about it because you have more income than you actually need coming in. When the market is crazy, you have more income than you need, so you don't need to worry about the day-to-day ups and downs. Right. It's a really empowering feeling to be able to retire that way.
When we come back from break, I want to talk a little bit more about inflation and why this is pushing the recession and what somebody who is close to or who is in retirement can actually do about it. But tell me again the 5 elements that you hit in the Retire Smart Roadmap.
So when we put together this Retire Smart Roadmap, it really consists of 5 key points. Number 1 is going to be a Social Security optimization plan. That's where we're going to take you through what your options are with Social Security. It's going to give you confidence to know that you're making the right decision with how you collect your benefits. Number 2 is going to be that custom-tailored Income for Life plan, where we're going to hopefully get you more income than you actually need coming in retirement. Number 3 is going to be a stress test of your retirement portfolio so that you understand what you own and how much risk you're taking. Number 4 is going to be a tax analysis to show you how you could potentially reduce your taxes in retirement. And number 5 is a legacy and wealth transfer plan to make sure that you're transferring money to your beneficiaries in the most efficient way possible. Folks, if you are concerned that your retirement plan is not recession-proof just yet, pick up the phone and give us a call. It's 833-308-5200. It's totally complimentary to schedule a visit with Nick, myself, and our team at Elite Income Advisors.
Is inflation and this current recession keeping you up at night? Please talk with a professional, whether it's us or someone like us. You want to make sure that you get the advice that you need right now. I know that we're all feeling the effects of inflation. I went to go get groceries recently. I had to take out a second mortgage. Don't do this alone. Call the phone number you see right here, 833-308-5200. More Retire Smart Maryland and solutions for this recession right after this.
How confident are you in your current financial plan? Do you know with certainty how the recent market volatility will affect your future hopes and dreams? How much are you paying in taxes? And how much are you losing to unnecessary high fees? You didn't work to save this money so that you could spend your time worried in retirement. Now is the time to take charge of your finances so you can feel confident about your future. Call in during the next 30 minutes of today's show only to set up an absolutely complimentary, no obligation, full-blown financial review that will result in your own customized written plan. This is a $999 value that we're giving away complimentary to the first 10 people who respond. We'll start with a full-blown analysis of what you already have. By running a report to untangle how much you are currently paying in fees, how you're allocated for risk, and what it's costing to work with your current advisor. Next, we'll identify your goals. Where do you see yourself in the next 5 years? Where do you want to go, and who do you hope to go there with? Is your current financial plan set up to get you there without mishap? Let's design a roadmap to create a financial plan you can follow with confidence. Get the piece that so many people are missing from their retirement. Find out how having a written plan can make a difference to your retirement dreams. Call now to schedule your complimentary, no-obligation, full-blown financial review today.
Welcome back to Retire Smart Maryland with Prashant Sabapathi, Nick Innerbichler. Show number 50 for Retire Smart Maryland.
Cool.
Thank you both for giving us all of this information over the years. It's great. We get tons and tons of phone calls, and then people who actually become clients, and even those who don't. Some people who just call and they're looking for information and advice. And Nick, you and I have talked about this before. It's great when people call before they make a decision. It's irreversible, right?
Absolutely. We do not have a time machine currently to go back in time. I can't tell you how many people have called and said, hey, Nick, I'm thinking about doing X, Y, or Z. I would rather have the conversation with them ahead of time to, bounce off. Is it the right decision? They may not take our advice 100%, but ask us the question before you pull the trigger, because you can't go back and undo something in a lot of cases. And Social Security is a prime example. When is the best time? When you do your seminars, I know that people have said, well, I've already taken my Social Security. Is there anything I can do to change my mind?
Sorry, we can't do anything. Yeah. Once you make the decision, it's done, right? And that kind of goes with retiring early, right? So we see all these people that really want to retire early, and they get a date set in their mind, but maybe they don't consider kind of the external factors that go into making that decision. And so that's where it's really valuable to actually have a plan in place before you get to retirement. Once you retire, I don't want to say it's too late, but you really want to have that stuff ahead of time so that you know that you're making the right decision. I always say the one thing you can't go into retirement without is confidence to know that you're making the right decision.
When it comes to Social Security, a lot of folks around a certain age, you'll start getting mailers, come to our Social Security maximization seminar. Once you've taken it, there's really only one way to reverse that ball from going downhill, is you have to pay everything back, and you've got to do it within that first year. Otherwise, there really isn't a lot you can do. So you want to talk to somebody before you make that decision.
Absolutely. It's a big decision. You
and it's not just for your spouse
yeah,
as well.
Absolutely. You can impact your spouse. So it's something that, again, there's a lot of misunderstanding about how these plans work, whether it's Medicare, Social Security, long-term care planning, whatever it might be. So sit down with a professional. It's, again, get a second opinion. Think about how that could impact the future of your life. If you're going to live another 30 years into retirement, you got to make sure that you did it right the first time.
Same thing with tax issues, right? Like, you don't want the IRS coming looking for you because you screwed something up with taxes, right? And so when we think about Roth conversion, when we think about withholdings on your income, maybe you have a piece of property, a second piece of property that you sold, and you didn't account for the capital gains, right? And so there's several different things that you want to be prepared for. And that really starts with getting a plan in place and really consulting with a specialist on the topic that you need to, be worried about.
Well, and a topic that we're not used to usually calling and asking a financial advisor about is we're talking today about how do we get recession ready, how do we be recession ready for what's going on right now, is inflation. I mean, inflation is usually built into your financial plan is somewhere around a 2 to 3% a year. Right. This inflation is coming. It's like the rug being pulled out from underneath you. So how can somebody get prepared for the inflation that's been happening?
So I'll tell you something that we've been seeing a heck of a lot lately. We know that the real estate market over the last couple of years has been really, really hot, and it's been a great seller's market. And so what we've had a lot of people do is sell their houses, right? They sell their houses for a heck of a lot more than they bought it for, and they put a lot of that money in the bank, and they don't really want to invest it in the market when the market's so volatile. But with inflation at 8.5%, you got to have that money working for you, right? And so one of the good things about interest rates actually going up recently is that you can get these shorter term kind of fixed accounts that really don't have any risk associated with them, and they're paying 3, 4, 5 years, anywhere from 3 to 4% per year in a lot of cases. And that gives you an alternative to the bank, which is, as we know, paying you a whole lot of nothing right now, right? So
it's a great time to look at those short-term alternatives. You know, CD rates not really going up as fast as we would like, especially at the bigger banks. But these short-term 3-5 year alternatives that, you know, you might get 3.5%, 4%, depending on the instrument. But there's alternatives. You don't have to have all your money in one thing sitting in the bank. You know, yes, it's nice to have a safety net, an emergency fund, et cetera. But it's also good to look at what can I do to earn the most bang for my buck? Because, you know, 8% inflation, and that's just the overall number, right? We're not talking about the individual costs, things like energy and clothing and travel that may have bigger numbers.
Just think about 8% inflation for a second. If you look at the rule of 72 there, that means if you need $6,000, say you're 65 years old today and you're getting ready to retire, you need $6,000 a month coming in to satisfy your retirement needs. At an 8% rate of inflation, that means just 9 years from now, okay, 9 years from now when you're 74 years old, you will actually need $12,000 a month as opposed to $6,000. Okay, so when we talk about recession-proofing your plan and recession-proofing your retirement, how are you going to deal with that increase? Have you ever had that conversation with your existing advisor? If you haven't, it's a great opportunity to sit down with a specialist and let's dive into some of those things.
You were talking about the cooling a little bit of the housing market, but the reason we're talking about inflation and for today's retiree is that you're not just going to be able to keep your costs static to where they're at today. I'll give you an example, automobile. You know, we might have 2 cars in the garage right now, but eventually, where are even used cars right now?
Right.
They're $20,000, $30,000, $40,000 for a used car. If we've got to replace the roof, we've got to replace the carpeting. Everything is going up in cost right now. And so we need to be able to have more than just safety in our accounts. We also have to have growth. But as you've been saying, Nick, the stock and the bond market really, really scary right now. So where do we go for that little bit of growth that can be somewhat safe?
Yeah, I mean, these short-term options, there's also, you know, our green bucket that we talk about. The green bucket provides you protection, but also has the ability to create a growing income in the future. So, you know, everything is going up. We always talk about that, but it's more realistic today. I always say, you know, everything's going up. A gallon of milk, a gallon of gas, whatever it might be. But 8%, we can't guarantee 8% growth in the market.
The other interesting thing about this is even when inflation comes down, and I hope it's sometime soon, but it very well may not be, when it comes down to 3 or maybe 4%, that doesn't mean prices are going to start decreasing. Right. They're just going to stop increasing at as a high of a rate as before. And so you have to have rising income built into your retirement. I mean, when we were working, right, if you're retired while you were working, you were getting cost of living adjustments on your income. You were getting maybe performance-based raises every year. Why should that not continue in retirement? I think it's so important to have a rising income in retirement. And that's what putting together a real custom income plan can do for you. And so we went through the 5 components of the Retire Smart roadmap, but dealing with inflation really comes back to having that income plan in place where you can understand where your income is going to come from, how it's going to change over time, and how it's going to be taxed as you receive it. So folks, if you're concerned that you don't know if your income is going to rise or if it's going to be enough to deal with inflation, pick up the phone, give us a call. It's 833-308-5200, or you can pull out your cell phone, open up the camera, and point it towards the QR code here at the bottom of your screen, and that will take you to a landing page to allow you to book that consultation with Nick, myself, and our team at Elite Income Advisors.
We're going to take a very short break. We're going to continue to get you recession ready. What are some solutions that you can do for yourself, for your family, to make sure that your income will stay consistent throughout your retirement years? So that's one of the things I want to talk to the fellas about next. Are you underestimating your own life expectancy? What can that do to your retirement plan? But call the phone number you see right here so you can get your Retire Smart roadmap, 833-308-5200. More of the 50th show of Retire Smart Maryland when we get back right after this.
As a good saver, you've been putting away money during your working years. Studies find that the biggest fear of retirees is running out of money. Market volatility isn't just the downward movement of stock prices, it's the size and frequency of change. The more dramatic the ups and downs, the higher the volatility. This can put savers who are newly retired or a few years away from being retired at greater risk. Today's generation of retirees is not receiving traditional pensions as our parents or grandparents did. Instead, we have retirement accounts such as 401ks or 403bs. These accounts typically expose your money to market risk. The last thing you want right before retirement is to lose a portion of the money you need for income. But how do you turn these accounts into a retirement income? Is it safe to keep all your retirement money sitting in the stock market? The last thing you want is to lose a portion of the money you need for income due to market loss. By working with a financial professional, you can learn how to turn a portion of your savings into an income stream for life and income for the life of your spouse if you're married. We all have moments in our lives when we wish we had taken action sooner. Don't let procrastination reign on your retirement parade. Act now before it's too late. Please call our office to set up your no-cost, no-obligation retirement income review today.
Welcome back to Retire Smart Maryland with Prashant Sabapathi, Nick Innerbichler of Elite Income Advisors right here in Maryland, helping you with retirement planning solutions. Today we're talking about how can we get you as ready as possible for the recession that we are seemingly in right now. We were in a 14-year bull run in the market, and it seems to have come to a screeching halt with all kinds of factors that we haven't dealt with in decades. Incredibly high inflation, a terrible bond market. So when we're getting out of the risky stock market, nowhere to run to, nowhere to hide. Money is costing us more. It's just so many different factors. And then one thing that we don't really think about is kind of underestimating our own life expectancy, not just for ourselves, but possibly for our spouse. When people come in, Nick, are they pretty honest about their age and their goals with their money, or are they not very clear about it?
Yeah, I think they're pretty upfront about that. But the thing that we always find, and life expectancy numbers take this into account, that the men in the relationship tend to outlive their spouse, assuming it's a female. So when we sit down, that's one of the first questions we ask, because when we take Social Security at the right time, we have to take into account when we might pass away and that break-even analysis. But the majority of men think they're going to go before their wife. That's not always the case. So we have to plan for the worst-case scenario and, or the best-case scenario. You live another 30 years in retirement and you have a great life with your spouse. So we want to make sure that all the factors are taken into consideration and making sure longevity doesn't impact our plan.
I think you shared with us, Spike, that your grandmother is like, what, 94
Yeah, I've got
old?
two grandmothers into their 90s.
Okay.
And again, we've said it's not that they didn't do planning. Both of my grandfathers, they were in the Army, so they got pensions there. They both worked at companies for long, long times. They got pensions there. But then they passed away. Yeah. So the Social Security went away. Their pensions went away. Yeah. And my grandmothers have lived an extra almost 20 years than what they had really planned. It's not that they didn't plan, we just didn't think of it.
Yeah, absolutely. And so going back to the Social Security, you got to understand that if you're married and one spouse passes away, you're going to lose the lower of the two Social Securities. And so in some cases, it may make sense for the person with the higher Social Security benefit to actually defer that benefit as long as possible, right? And that's because the longer we wait to take it, the more we're going to get, right? So I actually did a chapter in my book. It's called Fiscal Health, Retirement Wealth. This is your prescription for income generation, tax management, financial peace of mind. I did a whole chapter just on Social Security optimization, because what happens if you do live to be 90 or 95 years old? You don't want to go back and say, well, I collected my Social Security at 62 and now I'm not generating the type of income I need from that source to live the life that I want to. So you can't make mistakes with these things, because there's not really a chance to get do-overs in the Social Security world. So you want to make sure you get it right.
Now, something you had mentioned in our previous segment, we were working, and so hopefully we get raises along the time. We consider those cost of living adjustments. Good news is, if you're taking Social Security, there will likely be a very decent cost of living adjustment. But that comes next year, which means you're pulling that money from those accounts already.
It's after you've already
spent
experienced that increase. So and in fact, it's, we talked about 8% inflation, but the cost of living adjustment on Social Security is not even that much. So it's important to have, again, that plan, and how are things going to make those trade-offs? How are we going to grow our assets to keep up with that inflation.
Here's another thing is you mentioned underestimating longevity. That's what we've been talking about. And it's like, what about healthcare? What about long-term care, right? I think here's another thing that I think goes severely underplanned for is we think long-term care and we think about what the cost of care is today. Okay, so my mother needs long-term care and we have in-home care right now. It's running us anywhere from $8,000 to $10,000 a month. Well, if you're 50 years old or 60 years old, you don't need the long-term care today. You may need that 15 or 20 years from now. So is the cost going to be double? Is it going to be triple? I mean, who knows? And if your costs go from $8,000 in today's dollars to $16,000 or $20,000 a month when you actually need it, are you going to be prepared for that? So don't make the mistake of planning everything in today's dollars when the cost of everything tends to double every, 12 or 15 years.
Last thoughts on being able to get recession ready. What is most important for people to be evaluating right now? The risk in their portfolios, their tax situation, their health care needs? Am I leaving something out? What do we need to be worried about, especially as a retiree heading into a recession?
So, I think you talk about how cost of everything is going up, and I think what it comes back to is it's all about income. That's what we say in our office, all about income, which means that if you have enough income coming in, nothing can really throw you off that badly. I mean, yes, we'll go through inflation, we'll go through markets. That's the natural cycle that the economy goes through. But when you have enough income coming in, it's an empowering feeling to be able to retire the way that you want to. So folks, this is our last opportunity for today's show to pick up the phone and give us a call. Schedule that complimentary visit with Nick, myself, and our team at Elite Income Advisors, and let us help you put that Retire Smart roadmap together. And as a added 50th episode bonus, anyone who comes in for that appointment is going to get a complimentary copy of the book, Fiscal Health, Retirement Wealth, your prescription for income generation, tax management, and financial peace of mind. If you're worried about this, now's a great chance for you to pick up the phone, give us a call, and schedule that complimentary, no obligation visit.
Gentlemen, and thank you so much for doing today's program. We know the recession is real. We know that you are concerned about it. We want to continue to provide solutions. If there was a topic that we didn't cover in today's program, please call the phone number. The first, I'm going to do this, I'm going to make the phones blow up. The first 50 callers will get a complimentary copy of the book there so you can get your retirement smart. Call 833-308-5200. Thank you so much for watching. We'll be back next week.